What's up, everybody? Happy Monday and welcome back to Tech Backstage. We had last week off because I was traveling to San Diego to see my cousin get married, but I'm back and we are back in action this week. First up this week, we got Ruban Phukan, the co-founder and CEO of ResearchFin.ai. Ruban, how you doing today?
I'm doing great. Thanks, Eddie, and thanks for having me here.
Yeah, thanks for taking the time to be on the show. I'm excited to talk about what you guys are doing at ResearchFin right now. Really cool, and this might be a good one for my brother as well because we tried the day trading thing. Failed pretty miserably at it. My safer long term investments are generally where I have more success. But we tried some of this the reading the charts and the candlesticks, and I'm not great at it. So I'm excited to learn about what you guys are doing at ResearchFin and to talk about systematic trading. But before we do, why don't you tell us a little bit about yourself and how you came to co-found ResearchFin?
Absolutely. Thanks, Eddie. And just to give a quick background, is that I have never been a trader before. In fact, I mean, quite far from it. And like you, right? So I was like more relying on the more long-term investment and letting the experts, so-called experts, handle investments, right? But even from the entrepreneurship point of view, like I was never, I never wanted to be an entrepreneur in the first place, right? I followed the more traditional route of like finishing my engineering, and then I was lucky to join Yahoo. This was like back in 2000 during the good days of Yahoo, and I got the opportunity to work directly with David Filo, right? And that is where I got onto the data side of things, right? And I was part of the first data science team that was formed at Yahoo, even before data science was a word. And that is where I got the opportunity to actually see how data can be leveraged to really solve business problems, right? To understand user behavior, understand how business makes decisions, right? And we ended up doing several cool research which added to incremental revenue for Yahoo, and that we are extremely proud of. But that also led to the Silicon Valley bug biting me, right? So as you learn more about data and about how it can impact the business, you get to see that, hey, probably I can use data to also do something cool, right? And that's how I got started with my first company, which was again using data to understand user search behavior across different verticals, whether it's a job search or e-commerce search or travel search and vacation search, right? And then doing cross recommendations and helping build a better experience, search experience, using this search behavior across different verticals. So it was one of the first vertical search engines out there, a company called Bixi. And that was acquired by the Naspers Group of South Africa. And they were forming the first greenfield venture in India called Ibibo Group. So where I moved there to essentially lead their social media side of business. But then once an entrepreneur, it's very hard to not continue the journey. So I ran that side of things for a couple of years. And then I wanted to get back into using data for, again, solving business problems. That is where I started my second company, which is a company called Data RPM, where we build enterprise AI platform for industrial companies, right? So, I mean, this is when industrial IoT was just starting out, and there's like huge data coming from machines and sensors, and businesses had no clue what to do with it, right? So that is where we use machine learning to automatically learn from this data and help businesses predict machine failures and supply chain issues and things like that, right? And so Data RPM was acquired by Progress Software in 2017. Um, and when we were working on Data RPM, essentially because we were dealing with a lot of sensor data, which is basically time-based data and making
Hmm.
predictions, we got asked by either our customers and partners and all of those, I mean, casually over drinks, is that, hey, can we use this technology in the stock market to make predictions, right? Until that time, I mean, we have never thought about the application of technology like this in the financial market.
Right.
And yeah, why not, right? So let's start. How hard can it be? And very soon you realize that, yeah, the stock market is a very different beast. It's
Yeah.
the success in stock market is not about like predicting the market, because you essentially cannot predict. There are too many things, too many factors at play, which determines how the market moves. But what that led us is that it got us interested. Like, I mean, ResearchFin is started by the same co-founders that who started Data RPM. Um, and when we got started, we said that, hey, I mean, this looks like an interesting problem. And as we started diving deeper, we got to know about the pain that especially the retail side of traders have to go through, right? And like we say that there are like two ways to trade. One is the hard way, and there is the harder way, right?
Yeah.
So the
Yeah.
hard way is, of course, what most retail traders do, which is like you have mentioned, is that try to understand candlestick charts and try to do it manually, right? And
Right.
then, of
Yeah.
course, not many people are successful in taking that approach, right? Primarily because it takes a lot of discipline. It takes and it takes a long time, because essentially what you're trying to do is that you're trying to memorize patterns from huge amount of data, right? Or huge amount of charts, and
Yeah.
analyzing historical data, right? And then
Well, and
trying to,
it's a lot of data too, right? I
it's a
mean,
lot
like,
of data. Yeah,
yeah, I mean, like,
exactly.
we were working on some stock market applications on our, like, here at our company. And when you're talking about real-time trading, like, think about how many data points that is with all of the different
Exactly.
stocks that are available, right?
Yeah,
I mean, it's a mind-bending amount of information that you have to sort through.
correct.
And so before we dive into systematic trading, you were talking to me a little bit earlier. Let's go back and talk about that hard part, right?
Mhm.
So, and what's the harder part? That's the part that you were talking about, where people are actually doing this manually.
Correct.
Let's
Correct.
talk about that a little bit.
Yeah, so essentially there's the hard part and the harder part, and the harder part is essentially what most retail traders follow, right? Which is like the manual approach of trading. And in that manual approach, essentially you go through a lot of past charts. You try to identify patterns visually. It's almost like trying to look for patterns and shapes on the cloud, right?
Hmm.
Because I mean, that's essentially what it boils down to, because people say that, yeah, when you see a pattern like this, the most likely behavior for the stock after that is to go up or is to go down, right?
Right.
And that's a extremely hard thing to do, right?
Yeah.
And for most of the traders that we talk to, right, we talk to a lot of successful traders. We talk to winners of US investing championships. In fact, Oliver Kell, who won the US investing championship of 2020 with a mind-blowing 941% return in a single
Wow.
year, right? So he is one of our advisors at the company. And we learned from them that they had spent like years studying charts, right, and developing their edge. And for some of the traders, they spend like decades, and
Yeah.
they end up blowing up their trading account multiple times in that trial and error process to develop develop their trading style. And that's an extremely hard thing for most traders to do, right? So which
Right.
is where we see numbers like almost 90 to 95% of the traders fail and they never return back to trading, right?
Yeah.
And the most interesting thing is that in 2020, when the pandemic hit, there are like 20 million people who started trading globally, right?
Like when the pandemic started, 20 million people, like not
20
20 million
million
people trade globally, but 20 million people started
started
trading.
in 2020, right?
Wow.
I mean, and this is absolutely mind-boggling, right? So I mean, this
Yeah.
is one field where so many people are getting into without absolutely any background, right? Because that's how most people start. I mean, I started that way, saying, how hard can it be,
Right.
right?
That same. All, guilty. Yeah.
Yeah, absolutely.
Totally.
So and because there is no formal education that is required for retail trading, right?
Hmm.
So you just set up your brokerage account and you get started, right?
Yeah.
You
Like
start
low
following.
barrier to entry. Right. It's,
Exactly. And
yeah.
most people start following expert traders who had developed their styles over years and decades, right? And try to just copy them, and which is not really how it works, because a lot of trading is also about the mindset, right? Is about the trading psychology, and every individual is different. So what works for somebody may not work for another person, right? And uh, like they say that there is no just one way to trade. You would see two traders who have like completely opposite trading styles, and they are still making money. They both
Hmm.
are making money, right? Because at the end of the day, trading is more of a probability game, right?
Right.
So it's about when you trade and try to identify what's your edge, when the edge works and when it doesn't, right? And two people can have absolutely opposite styles and opposite edges, but they know when it works and when it doesn't, and they
Right.
have mastered that, right? And that is extremely hard for most people to do that manually, right?
Right.
So that brings us to the hard way to trade, which is essentially systematic trading, and that
Hmm.
is how institutions and hedge funds, they have been doing that for a long time, right? So in US, almost like 80-85% of institutional trading is automated, right?
Hmm.
Now, while systematic trading doesn't mean automated trading is a part of systematic trading, right? But essentially what systematic trading means is that you form hypothesis about what is likely to work, right, based on some general understanding of the market, and then you basically form rules out of those hypotheses on how you trade, right, based on that hypothesis. And the more important thing is that then you like backtest it under different
Right.
market environments, right, in
Hmm.
the past, and see when it works and when it doesn't, right?
Okay. That's an interesting concept. I hadn't thought about that, where you develop the rules, and then I like that thing about back testing, because
Mhm.
you can actually go back to certain periods and say, well, what happens if I do this over this period of time, right?
Correct.
And then maybe you don't have to blow up as many accounts like I have.
Exactly.
um, so talk to me a little. And I love the way that you put that. There's the hard way and the harder way of trading. There's no easy way. There is no medium way. It's hard and harder. That's it. I think that's great. But talk to me a little bit. I want to kind of like dive into a little bit of the details really quick. So we're going to do this the hard way, right? We're going to go systematic trading all the way, and we're going to start developing rules. And one of the things that I found, and I'm sure you'd agree, is that there's a couple things here. One of the first things that when I first got into trading, that I came to realize was that the stock market, while events like quarterly earnings calls can potentially drive pricing, it's really at the end of the day a supply and demand game, and
Mhm.
it's people's perception. It's again, like you could have a quarterly earnings call where you absolutely crush your numbers, and people decide to sell the stock anyways, and you lose money. So the thing about it is, it's not, you got to pull the emotion out, right? Because what you think might, just like you're talking about, like developing hypothesis and testing them, you might think, oh, hey, this company's going to have a quarterly earnings call and it's going to drive the stock price up, and it doesn't. And then but what I'm getting at here is like, how does ResearchFin help a user develop that rule set?
Yeah. So eh, so there, like, let's talk about how do you create rules and how
Yeah,
would
yeah.
you backtest, right? The more conventional or the more immediate way that everyone would do, and what is available today, is that you have to write code, right? Because I mean, you could manually backtest, but that is a much more complex problem, because now you have to go back in time, identify stocks which were like setting up, see how it worked, right? And that takes a lot of effort, and some of the experts have done exactly that, and but
Mm-hmm.
it takes them years, right? So that's not the optimal way. So the optimal way that, like, institutions follow is that they have code systems, right? Or for the programmers, there are a lot of libraries available where you can backtest like your
Mm-hmm.
strategy, right? But you have to code. But
Right.
most traders are not coders, right? So which is where there is a big gap in the market, is that unless you are coders, you cannot like build a systematic trading approach, right? So that is the gap that we are filling at ResearchFin, is that we have created a platform where it doesn't require anybody to write any code. You can basically visually select your criteria, and we have implemented a lot of them, including things which are like visually determined by traders, right? Things that it's not seamless. So we use AI to identify chart patterns. We use AI to identify trend detections, which is typically done visually, right? So we have solved some of those hard problems, and we make them available as basically simple drag and drop selection, right, through the
Mm-hmm.
UI, where you can say that, yeah, if the stock is trending out and it's breaking out of a trend, then you enter into the position, right? And then you basically can put a series of rules. They could be technical rules, they could be fundamental rules, or they could be even rules that says that, hey, if the earnings is coming up in the next 5 days, don't take a position,
Mm-hmm.
right? Because yeah, the stock could go either ways, right? It's very hard to know which way it will go,
Right.
because the earnings almost always lead to the trend to break, right? Either the trend would accelerate or it'll diverge, right? But something is going to happen, right? There are very few times that earnings don't change anything, right?
Right.
So that could be one of the rule, like you have said, is that, hey, don't trade during earning season, right? Or don't take a position during earning season, or if you have an open position, exit right before earnings, right? If you have profit, take profit and get out, right? But you could also test, right? Saying that, what happens if I hold through the earnings, right?
Right.
How many times is my position at risk, right? So those are some of the experiments you can do extremely easily by just pulling the rules and running a back test all from the UI without having to write a single line of code.
Now, do you feel like ResearchFin is aimed at professional traders, or do you think somebody like me who, makes a habit of losing money on day trading, could actually go in and figure out how to use this thing?
Yeah, so we have created a research fin for retail traders,
Okay.
and especially our focus is on the new traders, right? So of the 20 million people who have just got into trading, right? How can we help them develop their system, right? Because professionals traders, they already have a system. Not that they can't use us. In fact, they can use us to automate their trading strategies as well. But the benefit that someone would get is essentially new traders who are coming in and who is jumping into trading without any background, because for them we have a lot of the best practice templates already available, right? Different
Hmm.
strategies already available, which are like which we have automated, back tested, we have identified things that work under different market conditions, and we make them available as templates. Now these are not to say that you just trade that, blindly, right? So that's not the idea. It gives every trader a starting point to say that you can take this template and then you can modify it. You can add your rules into it. You can add your filters, right? Maybe the template trades all stocks and you want to trade only technology stocks, right?
Mm-hmm.
You can add that filter in and see how it performs. Does it perform better than if you trade all stocks, right?
Right.
And things like that, right? Um, and a lot of time also it's the risk, right? Because at the end
Mm-hmm.
of the day, trading boils down to risk management, and risk appetite is different for different people, right?
Right.
Somebody might be willing to take, like, let's say a 5% risk on a trade, whereas another person may be fine with a 10% risk, right? And the thing with trading is that the more risk that you take, the chances of reward is higher, as long as the risk reward ratio is maintained, right?
Okay.
And that is again another thing that you can backtest, saying that, yeah, if you take higher risk, how much higher before it just topples over and the risk reward ratio doesn't make sense anymore.
Very cool. Very cool. And do you guys, so I noticed, like, I'm looking a little bit at the website too. You said like, I don't want to say that, I want to be careful here, right? Because there's this, like, sort of, I think there's a dangerous trend in systematic trading right now, which is there's these kind of like get rich quick algorithmic platforms that are like, oh, just put your money here and follow our algorithm and you're going to make all this money. And it just, that's not the way this stuff works, right?
No.
So, like, I want to be careful here and I want to make sure, like, we put a line in the sand that, like, ResearchFin, you guys help people develop their hypotheses and help them develop their rule set, right?
Correct.
But it's not about algorithmic automatic trading. It's about,
No.
and this is the part that I want to get to, because this, I thought this was, with the last couple of minutes before we dive into, talking a little bit about your future roadmap. How hard is it to follow that rule set, and how hard is it to implement those rules once you've determined them? Because, again, when it's your money on the table, things can get emotional. So, talk to me a little bit about how hard it is to implement the rules, and how important it is to, stay the course, even when you're kind of like, head on going straight into the storm.
Right. So I'll also touch upon slightly on your point, saying that it's not about algorithmically trading, right? It's not just putting money into a system and say that, hey, this works. I mean,
Hmm.
there are a lot of people doing that. We are not. We are a platform company. We are helping traders develop their style, their rules. We are not about saying that, hey, here is a system that will give you 100% return in 5 days,
Right.
right?
Yeah.
It doesn't work that way, right? And in fact, in trading, it's the opposite, right? The more you try for that moonshot, the harder you are going to fall, right?
Hmm.
The more practical way is that if you try for smaller gains but more frequently, right? So I mean, because at the end of the day it's a probability thing, right? So if you try for a 3% portfolio gain in every month, right, that is more achievable, right? Because you are not like taking too much of risk, but that compounded can give you like a 43% annualized return, right?
Hmm.
So we are about developing those kind of consistent trading styles, right? Not moonshots. um, Now in terms of how hard it's to follow a system, is that a lot of time, I mean, the reason that a lot of people are not able to follow the system is that they have not tested the system under different market conditions, right? They don't know what is the boundary of the system, right?
Hmm.
So if you have tested it under different market condition, and you know that, yeah, there are periods where the system might give you like 4, 5, 10 consecutive losses, right? And that's okay. That's a norm in that market environment, because as the environment changes, I mean, of course there would be periods where the system could give you 10 consecutive wins, right?
Right.
So it's over a period of time when you take the aggregate trades, right? And the system could be, your system could be right only 50% of the time, right? As long as the whenever you are right, you make more money and you cut your losses like at half, let's say, right? You would still be net profitable,
Mm-hmm.
right? So even if you're right 50% of the time, basically you're
Right.
making twice as much when you win versus how you lose, right? And once you know those, once you have tested that under different market environment, it gives you more confidence, right?
Right.
So the idea is that again, our platform doesn't or we don't let you like even connect and trade algorithmically, right? Because there are a lot of challenges there. We help you determine your trade setups and then get the signals out of that so that you can place trades manually, right? But then the more you have tested that system and you know that, yeah, if something is not working, it is okay because it's within the norm, right?
Mm-hmm.
So it gives you more confidence to stick around with that system, right?
Gotcha. Does is ResearchFin, would you say it's geared towards any specific um like trading length of time? Like, is it better for people that are looking for, I know that like historically speaking, anytime you're looking at a longer period of time, that's why I always say like my longer term investments, my 401k, my index funds and things like that. That stuff, I'm not going to touch it for years, right? So that almost historically will always go up. But is Research Fin geared towards any, is it day trading? Is it like medium term trading? Like, do you guys have like a sweet spot for the types of traders that are seeing the most amount of success out of your platform?
Yeah, so I mean, it's not designed for any particular style, because every trader who trades in different trading periods, right, or trading intervals, they have to develop their strategy that works within that time frame, right? Because a day trading strategy is not going to work in a swing trading environment where you are holding positions for multiple days and weeks, right? Versus, I mean, when you are closing positions within a day. Versus if you are a position trader or more of a long-term investor, right? And you are actually, instead of investing in ETFs and mutual funds, you are actually picking stocks, right? Again, the strategy there is going to be different, right?
Yeah.
So we are a platform, so we are open to all kind of traders, right? But having said that, some of the templates which are available out of the box are more geared towards swing traders, right? Because that's a horizon that works well for most people, because
Hmm.
day trading works well for someone who can give time, right, or who is
Right.
doing trading on a more full-time basis, right? Because they have to be vigilant on when the market is open, right? But most people who is doing trading on the side, right, and they have a day job, so they cannot like be at the market true and true, right?
Right.
So for them, it's better, the better style that works is more swing trading, where they are holding positions for days and weeks, right? So a lot of the templates that we offer out of the box are around that, but
Okay.
that doesn't mean that a day trader cannot develop their own system and test it out, or a long-term investor cannot develop their own
Yeah.
trading style.
Very cool. So, a couple minutes left here. Talk to me a little bit about just kind of the Research Fin roadmap, and uh, what future tech are you excited about, and how do you think it'll affect your product development?
Yeah. So one of the things that we are launching is essentially the full platform that enables anyone to go from writing rules to identify trade setups to rules that defines entry and exit positions, which by themselves can be dynamic one, right? Saying that, yeah, if you enter into a trade and then something changes, right? So even if you had a certain profit target or a stop loss, you don't want to give up all the gains, right? So you adjust your strategy, your exit points dynamically, right? So that's something that we are launching pretty soon, where you can actually build an end-to-end system,
Hmm.
including setup identification, entry points and exit point identification, and you can test that out, right, across all of those. So that should be released in a few weeks. And then in the roadmap, our goal is to use as much of data and machine learning to help people come up with the system, right? Because again, if somebody is starting out, you probably not know what to pick, right? What strategy should you look at, right?
Right.
And how do you modify that strategy? So that is where we are building those functionality where, depending on the user input, right, depending on the style that they prefer, right, their risk tolerance level and things like that, the system will help them pick the functionality, the features, the rules that are more likely to work for their trading styles, and that helps them build their trading styles over time.
Very cool. Good stuff. Well, Ruben, we are out of time. 30 minutes just flew by. Appreciate you stopping by the show today and talking about all the cool stuff you guys are doing at ResearchFin.ai right now. I'm actually going to probably check it out right now. Super cool website. I was just diving into it a little bit right now, but appreciate you taking the time to speak with us today. Yeah.
Thanks a lot, Eddie. Thanks for having me.
Yeah, for sure. Carlos, the earthquake over? You're on mute, dude.
Yeah, I'm not surprised that I was on mute. I mean, you wouldn't hear my wife scream. Yeah, it's over. But yeah, there was a quick scare in several states. That's what I heard. So, hey, it's September 19th. It's a tradition here in this country.
Yeah, it's earthquake season, I believe they call it in Mexico.
Yeah, exactly. And exactly on the 19th. Well, anyway, let's hope there are no more replicas or anything like that. But in the meantime, it's announcement time, right?
Yes.
All right. So this week we're going to have a full week ahead, and starting with tomorrow, we're going to be speaking with Richard Purcell, the founder and vice president of sales at Occurate. And then on Wednesday, it will be with Shannon Ferguson, the founder and CEO of FanSafes. Finally, on Thursday, next on Thursday, it'll be with Shampa Bakshi, the founder and CEO of Converge Hub. And finally, on Friday, the conversation will be with Joe Venuti, the head of sales development at Q. So we have a full week ahead, Eddie. So please, if you're watching, join us through the week right here on Tech Backstage at 11 o'clock Pacific. Remember, join us and be here or be square. So
be square.
See you next time. Yeah.
Thanks, Carlos. Thanks, Ruben.
Thank you.
Bye.